So this is going to be a two-part series. In the part one of the series, we're going to discuss about the very basics about order flow, the order flow terminologies, and how the order interacts, how the market order and limit order interacts in the system. We're going to discuss about that, and we're going to discuss about market depth, and we're going to discuss about the types of data, what kind of data feed is required. That is what we're going to learn in this specific session. I hope my audio and video quality is good enough to kickstart. If yes, simply type yes so that we can quickly kickstart with the session. And as usual, the session is getting recorded. I guess you guys are able to hear me. So there is a chat box down there where you can just simply type yes. Vinod, am I audible? And Mr. Gajendran and everyone. So without any further delay, let's quickly kickstart with the session. See, first of all, let me tell you who should learn order flow, right? Can a beginner learn order flow? If you ask me, absolutely yes. A beginner can straight away start with order flow, because at a very fundamental level, order flow starts by analyzing the actual traded volumes, right? And that too, the volume study will be applicable mostly from an intraday trading perspective and scalping perspective. So if you are an aspiring intraday trader or a scalper, then order flow is a very important tool, particularly if you are willing to keep a very tight stop loss. So for that, what you have to learn here is you have to understand the very basic principles of order flow. So there are 14 to 15 principles are there, and there are some 14 to 15 trading strategies are there. And of course, it is going to be a limited series. So we'll be discussing in the second session, we'll be discussing probably one or two strategies. We'll be discussing one of the few strategies which are important. I'll be selecting those strategies and we'll be discussing in the second series. So don't miss it out. Kindly attend both session 1 and session 2. Session 2 is happening in the next week. So same time we'll be conducting the session where we'll be discussing about that. So order flow is for the traders who are beginners as well as for the expert level also. More the screen time that you are having with order flow, better your ability to understand the market nature, and you'll be able to dynamically adapt your trading strategies. Alright, first of all, we'll try to understand what is order flow. How many of you are very new to order flow, by the way, before getting started? If you are very new to order flow, just simply type new so that I'll get a hang, like how many people are new to that. Hemal Desai says new. Vishal Agarwal says new. Hari Krishna is new. Chetana is new. All right, great. So a couple of new people who are very new to order flow. Let me tell you, first of all, order flow is not an indicator which is going to show you buy or sell signal. Of course, we can create one, but order flow is primarily a visualization tool to understand how the orders are flowing into the system, how the market orders, specifically buy market orders and sell market orders, are trading at each and every price level. So it is more of a microscopic tool. If you look into the majority of the candlestick based studies, every candlestick will have some volume, right? But order flow is the one which bifurcates buyer volume and seller volume. And not only that, inside the candle, it gives you the volume levels of buyers and sellers at each and every price level. So it is a more detailed volume study, and that makes the trading decision of a scalper in a very simple manner. Order flow generally helps intraday traders and scalpers to find better trading opportunities, that too with a very tight risk management. That is the most important part over here. So what basically order flow shows is like order flow shows executed market orders. You know, it exchange itself acting like a matching mechanism. Exchange does what? It does a matching between the market orders and limit orders. So order flow shows only the executed market orders, executed market or buy orders and executed market sell orders. and it will be aligning like in a ladder format. Buy market orders always match with the sell limit orders from the order book, and sell market orders are matched with the buy limit orders from the order book. So basically, the exchange acts like a matrimonial portal, right? So here the buy market orders are married to sell limit orders, and sell market orders are married to the buy limit orders always. So if you see from the candle, you will be seeing the buy market orders on the right hand side and sell market orders on the left hand side. Maybe if you are watching an volume activity here, let's take a specific example here in this chart itself. Think about this 159 here. There is a 159 order on the buy side, and there is like 160, 142 on the sell side. So let's talk about the buy side over here. So the buy side of 159. So usually in Bell TPO, right, we'll be having the habit of using it in terms of lots. Usually majority of the trading tools will be using in terms of shares. Here in Bell TPO, you can use in share format also, or if you divide by lot size, you will be able to get in lots. So this 159 lots, 159, give me a sec. This 159 lots on the buy side, it is more of a market executed market order, market buy order. Okay, so if there is a buyer, there should be equal amount of seller, right? So who is that seller? If you ask me, the seller is nothing but a limit sell order. So what does that mean? The 159 is a transaction conducted between a buyer and seller. Who's the buyer here? Buyer is a market order, and who's the seller here? Limit sell order. Remember, both are executed transactions. These are completed transactions. They are not pending orders. You have to remember, these are completed orders. Completed and executed orders. Only executed orders are the one you'll be able to see it on the candlestick charts. Likewise, let's take this particular example. Maybe we'll take on the sell side here, 174. So the sell side, we got 174 over here. What does that mean is like we got a market sell orders. It's opposite party. Who is the counterparty here? The counterparty is a limit buy order. Limit buy orders. All right. Very simple. Are you able to understand this number? So at each and every price level, we call it as bins or TPO size or bricks. So it has different names. We will be collecting those information. For example, let's think about a simple example over here. Let me try to pull up an another example. Imagine I'm just gonna split the I'm gonna put a box over here. Inside the box, I'm gonna split into various bins. So we can call this a bins or bricks or TPOs. It's a size which we set as a user. Imagine the price is starting over here. It is a 5-minute candle. Price is starting over here. It is moving up and it is coming back down. When it is moving up, it start printing. The buyers are the one who is pushing the price up. So who pushes the price up is like buy market order. Let's say I'm just getting a 10 over here, and then I'm just getting a 50 over here, and maybe I'm getting a 70 over here. Now when the price is getting back down, so what will happen is like when the price is getting down, let's say another 20 lots are getting added, or let's say another 30 lots are getting added up. Another 30. So 50 plus 30, it will become 80 lots. So when the price is getting down, this 50 will become 80 over here. Let's say price is again going down. Maybe another 60 lots are getting added up. So it becomes what? Already we are having 10 lots. 10 plus 60, it will become 70 lots. So this will change to 70. Likewise, the value will be collected on the bins, right? So means when simultaneously when the price is going down, will be on the sell side also. Let's say 50 on the sell side and maybe some 100 on the sell side over here, right? When the downside is done and more buying activity is happening, as long as more buying activity is happening in the bin value will be keep on accumulating those values. Whether if it is done by buyer volume get accumulated. If it is done by the seller, then seller volume will get accumulated. That is how these box will be collecting those volumes. Right? So the volume will be collected at each and every bin level, and you can decide what bin level you want. Something like Nifty will be keeping a size of 2 points. 2 points are we called as a 40 as the brick size. This 40 will be multiplied by the tick size of 0.05 and it becomes a 2-point DPO, 2-point brick. Every 2 point in case of Nifty will be collecting it. Something like Bank Nifty, I'll be using a 5-point brick. Or we can say like 100 is the software control which will be multiplied by 0.05. So we'll be getting a 5-point brick size over here. All right. So these are the software setting. I had to key in these values into my Bell TPO indicator settings. I'll be setting those brick size. So automatically I'll be able to render these bins automatically. So here in case of Nifty, every 2 point, the data will be collected. All right. Now let's move a little forward. So if you ask me what are the list of trading strategies are there. So we have total almost 16 strategies we will talk about, particularly zero volume zones, cluster volume analysis. Under cluster volume itself, it is categorized further into 3 to 4 variations. Delta positioning, delta unwinding, exhaustion bar trade setups. Again, under exhaustion trade bar setups, we classify into 3 categories again. Momentum reversal, momentum auction reversals, strong secure low, weak secure low, trapped buyer, trapped seller. We'll be analyzing the COT trades. And then we'll be identifying a trending day odds, low volume market tops, breakout failures, and then analyzing the volume flow for the day, how the volume flow is happening for the day. Event trading, how to deal with an event whenever an event is happening, like RBI policy announcement or budget day announcements are happening, how to deal with those kind of days using order flow, how to find opportunities using order flow. And when it comes to stacked momentum trading, right, how to play with stacked momentum trading, how to deal with whenever you are seeing a stacked momentum in the order flow charts, how to deal with that. Order flow sweeping, what does it mean, how we can exactly see an order flow, whether order flow sweeping algorithm is happening in the markets or not. And momentum exhaustions, delta divergence, trade setups, recognizing stop hunting, how you can recognize stop hunting, how you can recognize order flow sweeping, COT breakout failure strategies, how to anticipate breakout failure using COT setups and using volume patterns. So that is what, these are the list of strategies which are covered. It's highly elaborate. And of course, in our mentorship session, Traders 3.0 is coming in coming around March. So where we'll be conducting all these order flow concepts in a very detailed fashion. Now in this series, we'll be discussing, as I said, 1 or 2 strategies definitely we'll be discussing in this session. So where we'll be discussing about couple of strategies on trapped activities and couple of setups on zero volume zones. We'll tend to cover it. So stay tuned. In our chapter 2, we will be discussing about those things. Now coming back to the topic here. So we can classify order types into 2 categories. One is an active order, another one is a passive order. An active order is the one which moves the market, right? An active order is the one which moves the market. Typically, market order belongs to this category, market order. Market order is also called as active order or an aggressive order. A passive order is nothing but a pending order. It is nothing but what? Pending order. A pending order is nothing but a limit order. So what is the difference between these 2 orders? If you ask me, the market order moves the price. It moves the price. Whereas the limit order, they supply liquidity. They supply liquidity. They control the price action. They control They cannot move the price action, but they can control the velocity of the price action. Control the price action. When I say control, what do I mean here is, if at all the limit orders, they want to stop the price, they can stop the price at any level. Maybe they can create a resistance, they can create a support zone. That is totally possible using the passive orders. So these passive orders are called as market makers. Are called as what? Market makers. Whereas the active orders are called as market takers. Market takers. So here market makers, they supply liquidity. They supply liquidity. If you are submitting a limit order into the order book, that means you are supplying liquidity. If you are sending a market order, that means you are consuming that liquidity. Consuming liquidity. Right? That's what it means. So what are active orders do? They are mostly market orders, or they can be stop loss market orders also. They move the price, they consume the liquidity from the order book. You can visualize market orders only after the execution of the trade. And buy market order moves the price up, sell market order moves the price down. So think about passive orders. Passive orders are pending limit orders. They cannot move the price. They can only wait for the market orders to come and fill it up. They provide liquidity and orders are posted to the order book. Limit order controls the velocity of the price action. So mostly used by institutions to accumulate or distribute, because majority of the institutions, right, they don't want to disturb the market at all majority of the time, unless there is an emergency situation or something like that. They always place large quantities of limit orders. That too with small packets they will be sending it. So they'll be accumulating or distributing. Very rarely institutions use market orders. Whenever they want to do some sort of fire sale or they are in a panic situation, usually they'll not be under panicking situation unless there is some sort of emergency is going on, or they are spotting a trading opportunity where it's going to be there for a very limited period. Only then they'll be going for a market order. Unless otherwise, they will not disturb the market at all. They'll be supplying liquidity and they'll be happy to take at the price what they are demanding. Used by market makers to provide two-way quotes. Of course, when it comes to Indian markets, we don't have an official term called market makers. But in US markets and all, they do have market makers. They supply liquidity. That's what these guys do. They always provide two-way quotes. When it comes to Indian market, we have arbitrages. Arbitrages provides liquidity into Indian markets. Now, coming back to the topic here. So think about this example. Now, in this example, you are seeing two things over here. One, on the left-hand side, you are seeing an order flow, which is having an market order. So the one which you are seeing here, this is order flow charts. And the one which you are seeing on the right-hand side, you are seeing a limit order book. So this is limit order book with up to 20 levels. So 20 levels of order book is what you are seeing in the system. You can see that there are two prices are there, bid side and then ask side. Maybe I'll try to explain this with a very simple example. For that, I'm going to go to the whiteboard here. Let me pull up the whiteboard. So I'm going to pull up a whiteboard here. So once we are done with that, we'll come back and then watch this small video on how the market depth happens. So let's take two blocks. Let's say this is my order flow. I'm just going to give some small example over here. Imagine this is my order book. In order book, if you see, we have two prices, bid and ask. Bid and ask. Order book contains what? Only pending limit orders. If I am submitting a limit order, this goes and sits in the order book at a particular price level. So buyer will be there on the left hand side and seller will be there on the right hand side. This is in order book. If you are looking into order flow in a single candle, the buyer will be there on the right hand side and seller will be there on the left hand side. Imagine the last traded price is, the LTP is 100. Last traded price is 100. And let's say the seller is willing to buy at 101. Maybe some, we have some 10 quantities are there. We put quantities outside. 10 quantities. And then at 102, there is another 70 quantities are here. And 103, let's say we have another 120 quantities are there. On the buy side, likewise, at 99, let's say we have some 50 quantities are there to be filled. 50 quantity. And then 98, let's say another 75 quantity is here. Then we have 90 quantities. Okay, so these are nothing but what? Buy limit orders and sell limit orders. Basically, these are limit orders. Let's say the price is at 100. So I'm a buyer. I want to buy, let's say, 25 quantities. 25 quantity I want to buy. Now, what will happen? What will happen? I'll tell you. So I'm a buyer. I am sending a buy market order. If I am sending a buy market order, now what will happen is like it will try to consume the liquidity from the sell side. So it goes to the sell side. It try to pick up this 100 and from here it will try to take the remaining quantity. The remaining quantity is what? 15. So this 10 plus 15, it becomes 25. So when it is picking up the 10 quantity, the price will shift to 101. Of course, another 15 lots will get punched. So I am the one who is pushing the price from 100 to 102. 101, 10 quantities will get executed. 102, remaining 15 quantity will get executed. So now the last traded price will change to what? It will change from 100 to 102. So the new last traded price is going to be what? 102. That is going to be the new last traded price. You're getting this concept? So in that case, if I am having an, let's say this is my 100 and this is my 101 and this is my 102, what I'll be seeing like price moves from 100 to 101, 10 lots got executed and at 102, 15 lots got executed over here. So this is what I'll be seeing over here. So actually, who is this 10 lot? He's a buyer. Who is this 15 lot? That is also a buyer. It's done by the same buyer only. But that 10 and 15 is executed at two different levels because at 10 we had a player of who is having 10 quantity and 102 we have 70 quantities are there. Only 15 quantity got consumed over here. So price moved from 100 to 101 and then 102 is what the price had moved, which is what you would have seen at the price level. So the price would have moved from 100 to straight away towards 102. That is what it would have been happened over here. Now we're getting this point. So actually what is happening? The order is getting shown on the buy side, whereas the liquidity is consumed on the sell side. Liquidity is consumed on the sell side. Are you clear with this? If you are clear, please type clear. If you have questions, please let me clear your questions before moving forward. So there are a couple of questions here. Vishal is asking, does exchange match limit orders with limit orders too? Yeah, in some cases, limit orders with limit orders will get executed. Maybe I'll tell you in what case, but that's a very interesting, nice question though, Mr. Vishal. So let me tell you, let's say my LTP is at 100. Think about a simple example. If I am placing a limit order, let's say I am placing a buy limit order, what will happen? Let's say I'm placing at 98. It goes to a pending state. Pending state. But if I am placing a buy order, buy limit order, let's say at 102 I'm placing. What will happen? What do you think will happen? Anybody? You guys place order on the system, right? What will happen if I am going to place limit order at 102, whereas my last traded price is at 100? What will happen? Just think through that. Take a minute and then think through that and then reply. So Raj is saying price 98 executed. Vishal is saying it gets bought. See, more or less you guys are correct, but let me try to give an actual explanation. So what will happen is, like, we have always two prices from the order book, right? Let's say on the order book, say this is buy side and this is sell side. And let's say the buyer is willing at 101 is there, 102 is there, and 103 is there. These are top 3 levels only I'm showing. Of course, brokers will be having top 5 levels. Some brokers, they provide up to top 20 levels also. For example purpose, I'm keeping it as simple. And let's say on the sell side, we have 99, 98, and 97. So when I am purchasing a buy limit order, okay, remember it's not a stop loss limit order, it's just a limit order only. Only limit order goes to the order book. Stop loss limit order will be maintained in a stop loss book. Don't confuse both. So if I am submitting an 102, basically I'm already getting at a cheaper price, right? So if I want to put a limit order at 102 in a pending mode, I have to submit only stop loss order only. But generally people will not try to buy above 102 because already the price is already available at 100. So what will happen is, like, since the last traded price is available down below that, it goes and checks the top available seller. So buy limit order will checks with the sell limit order and it will get executed like a market order. Okay. So only in this case a limit order will execute with a limit order because it is not a limit order basically. Since already price is available at a cheaper price, it will execute like a market order. So the last traded price will become 101 in this case. All right. So a market order will always takes the liquidity from the limit order, unless if you're punching order like this, buy limit order. If you're punching, some people they punch it so that they want to reduce their slippages. Some people they send a buy limit order even at a slightly higher price also. They know that it will execute like a market order, but one another way, if markets are moving very faster, it gets into a pending mode. They know that. Some people purposefully do that. Some people they mistakenly do this, right? So instead of putting a limit order, a stop loss limit order, they will mistakenly they send it as a buy limit order. Mostly beginners, they do this kind of mistake. But some people they want to control the slippage. For that, they will put a slightly higher limit order so that they know that it will get executed at the best available price. In that case, these orders are called as a marketable order. Any buy limit order you're placing above the limit order is a marketable order. Likewise, any sell limit order you're placing below the last traded price, something like, let's say limit order, I'm placing limit order at 98, whereas last traded price is 100. Again, it will try to execute at a 100 or whatever the best available buy order will get executed. Right? These are marketable orders. So you can try to Google marketable versus non-marketable order. You'll get to have a fair idea on that. So there is also one more question here. Again, the question is from Vishal Agarwal. His question is, does passive order contain also the volume of intraday orders or only cash delivery orders? So passive orders means nothing but a limit order, right? It can be intraday orders, it can be NRML orders, or it can be cash or delivery order, doesn't matter. As long as you are submitting a limit order, all the orders, all the MAS order, NRML order, it goes and sits in the order book only, as long as it's a limit order. If it is a stop loss order, it goes to the stop loss book. So the only difference between order book and order stop loss book is, so as I said, the exchange maintains 2 book, right? Exchange maintains 2 book. Let's talk about that. So it's basically a table which contains a bid and ask. We'll be having a bid side and ask side in case of order book. In case of stop loss book also, a similar way it will be maintained. We'll be having a bid side and ask side. I mean buy side and sell side. Buy side and sell side. In stop loss book. So what is the difference if you ask me? This is available to the public. Completely people can access it. Mostly brokers, they provide up to 5 levels, as I said. Brokers, they provide up to 5 levels. And some premium brokers, they provide up to 20 levels. And HFT, high frequency trader, they will get access to the complete depth. So this is what we call as a market depth. The market depth is available up to 5 levels in case of brokers, 20 levels in case of brokers like Zerodha or 5 Paisa, and HFT complete levels. So many people, they think, oh, if HFT is having a complete level, they can see my stop loss. The truth is they can't. I'll tell you why. Because if I am submitting a stop loss, I'll be sending a SL order or SL market order, stop loss limit order or stop loss market order. That will go and sit in the order book. So for privacy purpose, exchange completely hide these orders from everyone, right? So for privacy purpose, it will be completely hidden. Nobody can see your stop loss technically, right? Maybe institutions can anticipate that maybe the trader might be, most of the traders might be keeping their stop loss around round numbers, or most of the stop loss might be kept around the highs or lows, or high plus 5 points or low plus 5 points. Right? Those are the places most of the time the stop loss will be crowded. Maybe around today's low or yesterday's low or 5-day back low or recent swing low. This is where majority of the traders, they keep their stop loss. But nobody else will see nobody else stop loss. Even institutions, even HFT players. All right, that is a real truth here. All right, coming back to the topic. So here what you're seeing here is like you are seeing the market depth up to 20 levels. So on the right hand side, you are watching the Zerodha market depth. The broker provides up to 20 levels, where you can clearly see that the price action is keep on moving up and down, and the last traded price is changing. Last traded price, when the price is moving up, that means buy market order is getting executed. When the price is pushing down, you can see that sell market order is getting executed over here. And it keeps on, every time the buyer and seller will be hitting the system, particularly with stocks like Nifty. Now, you may also have to understand what is the difference between high liquidity and low liquidity. Maybe for that, I'm going to take a comparison of a couple of charts. So I'm going to pull up a couple of charts over here. So let me first of all show you Nifty order flow charts. So this is how the Nifty order flow charts looks like. So all I want to do is like I want you to focus on the volume activity which is happening on both the sides. So if you could see the volume activity in case of Nifty, you can see that there are many places the volumes are getting traded, something like with a very good volumes you can see around here. So 338, then 377, here 317, 182, 105, 135. So many places the volumes are getting traded with more than 100 plus lots at a single price level, right? So we've been talking about single price level. Maybe I'll take the last Friday's activity. So recently, let's talk about last Friday's price action. So this is last Friday's price action, right? Look at that, some of the candles even started trading with heavy volumes. A heavy volume is what getting traded over here. Even some of the places we are seeing big volume activity, 523, 835, right? So this is with, these are like highly liquid markets. Highly liquid markets, even 500 lots, 800 lots, 700 lots is quite common one. But maybe if I use something like a Reliance kind of charts, let me try to pull up Reliance charts over here. So what I'm going to do here is I'm going to right click, I'll duplicate in a new tab. I'm going to first just pull up Reliance here. Reliance underscore I. Obviously, I need to do the brick settings here. So I'm going to do the brick settings as well. I'm going to right click. I'll go to the indicators. For something like Reliance, I'll be using a 50 paise, right? So every 50 paise, I'll be keying in. Lot size is going to be 250. And brick size is going to be what? The brick size is going to be 20. So 20 multiplied by 0.05 is going to be the brick size here. So if you could see this, you can see that very few places only 500 is getting traded. Majority of the places you'll be hitting what? You'll be having the lot size like hardly you'll be getting anything above 100. Some places you'll be getting 100. Some places you'll be getting 200. That is the max. Majority of the places you will be seeing what? Around 162. Very rarely you'll be seeing 392, 290. These are like kind of big volumes which are getting traded around those levels. Majority of the candle, if you could see, hardly it is less than 100. Like this is what it shows is like Nifty has a high liquidity. Many candles traded above 200, 300, 400, even 800 lots get traded at many places. But Reliance is not having that kind of volume. Means participation is very low. More people trade Nifty on both buy side and sell side will be having a complete fill. Whereas Reliance has a very, very decent liquidity. I will not say like poor liquidity. It has a very decent liquidity. But if you look into something like FinNifty, so this is with FinNifty here, you can see that hardly any trading is happening over here. FinNifty options has liquidity. But if you see here, a lot of zero zones you can see over here. These zero zones are nothing but what? There is lack of orders, lack of pending orders around those levels. If there is no limit orders, then order will not get executed at all. It is loosely packed. Whereas Nifty, Reliance and all, it is densely packed. Each and every price level you will be finding a trader. But when it comes to FinNifty, the liquidity is not available. That is what you are seeing a lot of zero zones. These kind of things will be heavily prone to manipulation. Maybe if you go back and open the order flow charts, you will get to have a fair idea where is the high liquidity, where is the low liquidity is all about. Definitely, if you're a beginner, you should know about this. Right? So highly liquid instruments are difficult to manipulate. Low liquidity instruments are easy to manipulate. That is the thing here. So that's what I want to show here. Now let's go back to the topic. So if I am seeing an aggressive buyer on the buy side, which means the passive sellers are there on the right hand side. So think about that, both are same values only. There is a 159 lots. If it is there on the buy side, that means which is done by aggressive buyer. So who is the counterparty? The counterparty is matched with the passive seller. So that same 159 lots is nothing but a passive seller over here. That's what I want to show here. If an aggressive seller is there on the left hand side, that means the passive buyers are on the right hand side. These are executed orders I'm talking about. Even if a passive seller or passive buyer also, they are nothing but a executed order are the one which will be shown on the order flow. So some people ask, right, can I see only the executed market orders only? Absolutely not. You can also see the executed passive limit orders also. The only thing is like instead of buy side, you have to consider as a sell side. Instead of sell side, you have to consider as a buy side for the passive limit orders. That is the only thing here. But can I visualize pending limit orders? If you ask me, order flow will not show pending limit orders. To be very clear on that. All right. Order flow shows only executed market orders and also executed limit orders as well. Alright, so if you look into the order flow charts, you'll be finding a couple of important blocks. So one of the important block is the red color boxes. You can see these red color boxes. So these are the high volume nodes. So means if I sum up all these buyer and seller put together, buyer and seller, if I put together, the red color box is the place where it has the highest volume, which is also called as a high volume node. High volume node, or we can give another name to that, it's volume point of control. Volume point of control on the 5-minute charts. The charts what we are using is a 5-minute chart. Typically 5-minute chart is what primarily used. However, some people use 3-minute bar. Some people use even range bar charts. Maybe I'll show you how the range bar charts looks like. I'll go to the Ninja Trader charts. Let's say I'll try to pull up Nifty here, Nifty order flow. Let me duplicate in a new tab. Okay, so if I want a range bar charts, what I have to do here is I'll simply type 400R. A 400R means 400 will be multiplied by the 0.05 tick size. That will get me 10 blocks. So 10 blocks I'll be getting it. Every candle will have only 10 blocks. Means 20 points is what I will get. 10 blocks. 10 into 2 bricks is nothing but 20 points. So here I have to count diagonally. Usually range bar charts are predominantly used by the trend traders, where the range bar charts will not have much of a whipsaw. It is better than a candlestick charts, but same rules, same principles are applicable in the range bar charts also. And Ninja Trader itself quite famous for Renko charts, range bar charts. In Ninja Trader, you have tools like Uni Renko, Better Renko. So a lot more variations of Renko is there. Hybrid Renko. Right? Can I apply order flow on Renko charts also, if you ask me? Absolutely yes. You can also use order flow on Renko. You can use order flow on range bar charts. You can use order flow on tick level charts. You can use order flow on the candlestick charts also. Which one I prefer, if you ask me? I generally prefer 5-minute charts if you are using a minute level data. Maybe 3-minute you can go if you are looking for even more very tight risker. Or you can go for a range bar charts, particularly you are looking for, you want to avoid whipsaws and you want to see more trendiness in the charts. So you can go for a 400 range bar charts. Something like Nifty, it is 400 range bar charts. Maybe something like Bank Nifty, it could be 1000 range bar charts. That is what you can consider using it. All right. Now coming back to the topic here. So we discussed about high volume nodes. On the extreme left hand side, you can see that on the extreme left hand side, we are having a thing called intraday volume profile. Intraday volume profile, which is what it is shown in numbers in the golden color. So these numbers are intraday volume profile. And it also gives the bifurcation of the how much of them are buyers, how much of them are sellers. It doesn't give a number, but shows it gives you in terms of percentage how many of them are buyers and sellers. It gives in terms of histogram. So which is nothing but the intraday volume profile. So basically it shows today's intraday volume profile. If today is a holiday, basically it shows the very recent available day. Means Friday. If today is Sunday, that means it shows the Friday is the recent available day. It shows the Friday's volume profile. Again, Monday market starts, it will get resetted and it shows only the Monday's volume profile. All right. So this is one thing. And then we have delta at the bottom. So notice that this is called delta candles. Delta can be negative or delta can be positive. So first of all, we'll try to understand what is a delta. Let's say if I am adding up all these blocks on the buy side, let's call as a total buyer, TB. TB is total buyer. I'm summing up all the buy side activity. Likewise, on the sell side, I sum up all the sell side activity. I'll call it as a TS. So my delta is nothing but the total buying quantity minus total selling quantity. Right? So that is what a delta is all about. Delta can become positive. What is that positive number? So here the number is 327. A plus 327 means in that candle, there are 327 more buyers than the sellers. Whereas here the delta is getting negative, something like minus 503. Minus 503. What does that mean is like in that particular candle is completely controlled by sellers. Sellers are more in this candle. How much more? 503 more lots compared to the buyers. That's what a delta is all about. Very simple indicator. Generally, I would prefer to look into where the big delta is happening, big buyer delta is happening, big seller delta is happening. That will give me insights into what I should do. Should I have to take a mean reversion, or am I seeing some sort of a commitment from the traders, or I am seeing some sort of a trend reversal opportunity or trend following opportunity. That is what we'll be able to make out from the delta. Sometimes delta will be small, sometimes delta will be hugely bigger. Whenever big traders are positioning, whenever there's a smart money commitment is positioning, we will be looking into the delta activity. All right. So delta, we can see it in the table also. At the bottom, you can see tables. Maybe I'll show you the tables here. When it comes to tables, I always use only three parameters. Number one, delta. Number two, cumulative delta. And number three, volume. You can see that you can track my mouse here. At the extreme left, I am showing that three values: delta, cumulative delta, and volume. However, you can also control it from the table. From the table, you can select a total buyer, total seller. You can get it. So it sums up and then it shows the total buyer activity and the total seller activity. It shows up. Ask is nothing but the total buyer, and bid volume is nothing but the total seller. So buyer minus seller is what the delta is all about. So here in this candle, 2043 is the buyer, 982 is the seller, and 1061 is the difference between total buyer minus total seller, and it's a positive delta. I'm talking about 15-3 candle, right, on a 400 range bar charts. That's what I'm talking over here. All right, so I can also add or remove from the table blocks. So I'm just going to simply remove this. Typically, I don't use. I use only four things. One is the session letter, which is the market profile session letter, to understand what letter is running, right? You know, right? Market profile letter will be running from letter A to letter M. Every half an hour letter will get generated. So the last letter will be letter M for the day. That only will be running for 15 minutes. Rest all the times, each and every letter will be generated every half an hour once. So delta, I'll be using it. Cumulative delta, I'll be using it. Volume delta, I'll be using it. Cumulative delta shows the delta activity for that particular day. Let's say recently the cumulative delta is like 4543. So what does that means is, today, as on today, I mean that means last Friday, that particular day, there are 4,543 more buyers are there compared to the sellers. So delta activity will track at individual candle, but cumulative delta will be nothing but a sum of all the deltas. So at that end of the day, if I'm seeing 4543 as a number, a positive number, that means that particular day there are 4,543 more buyers are there compared to the sellers. Of course, buyers and sellers would have been competing. Total buyer for the day minus total seller for the day is what it gives me the picture here, 4543 as a net delta for the day. So that is the delta. And you can also see here, there is an interesting number called, there are two things you might be finding inside a candlestick charts. So you see this number here, 241 and 166. So these are called as a commitment of trades, COT levels. So this is the buyer commitment and this is the seller commitment. Let me try to explain this with a simple example here, how this commitment has been plotted. So first of all, let's try to take a simple example here. Let's say this is my price. This is my price. It's moved like this. Price opens over here. Open is also low here. It establishes a high and it closes over here. This is on a 5-minute scale. Imagine this is a 5-minute chart. Within that 5 minutes, this is how the price action happened. So this is about price. But likewise, delta also will be keep on moving like this. Delta always opens at 0. Delta opening is always 0. It starts at 0 it will keep on, maybe it would have meant a little bit lower also. And finally, because of the buying activity, price, the delta is nothing but what? If the delta keeps moving up, that means more buyers are there. And finally, some late sellers would have been kicked in. The delta would have been closing over, delta closing. So delta closing is the actual delta that you are seeing on the order flow charts. During live markets, live candle, the delta value will be keep on fluctuating. Like how delta also can go to a low and delta also achieve a high. Now based on this only, the delta candles are constructed. The delta candle, if I try to construct, the candlestick will be looking like this, more or less. This is how the price based candlestick will look like. Whereas a delta candle will be looking like this. We'll be having a delta high and we'll be having a delta low. This is delta low and delta open. As I said, delta open is always 0. And delta close is the actual delta that will be shown on the order flow charts, and delta high. So this is how the delta candles are getting plotted. Now coming back to the COT levels. So when it comes to talking about COT levels, imagine COT talks about how much effort. So what does that COT talks about? Effort made by the buyers or effort made by the sellers. Let's say if the price action is happening something like this. The price action does something like this. So this is where the price opened. This is where it went to a low. This is where the price went to a high. And this is where the price went to a close. So the effort made by the buyers from the low of the candle towards the close of the candle. Effort made by buyers. That's what we call as a buyer effort. Buyer effort is what we call as a buyer COT. Buyer COT. How much effort it has been made in terms of delta terms. How much delta is required to push the price from low of this candle to the closing point. That's what a buyer effort is all about. A seller effort will be calculated from the high of the candle towards the closing. That is how the seller effort will be calculated. Seller effort, which is also called as an seller COT. Seller COT. A buyer COT is also called as an low COT. At the low of the candle, it will be displayed. Seller COT is also called as a high COT. At the high of the candle, it will be displayed over here. Right? So that is how the COT is calculated. Maybe if you're wondering above that COT, you will be having a ratio. It's called COT ratio, COT ratio. COT ratio. Let's talk about that COT ratio. Let's take a simple example. Let's take this example from this particular bar itself. You see this 50 and 530, right? For 50, I'm getting a CR ratio of 0.09 and here I'm getting a ratio of 10.60. So let's take a candle. Imagine the same candle is having a COT ratio. So bottom we have 50, right? 50 and then we have 530. This is buyer COT. Buyer COT is 50 and this is seller COT. This is seller COT. So we have COT ratio over here, COT ratio. So this COT ratio is nothing but buyer COT divided by seller COT, 530, which approximately comes to 0.0 what? 0.09 is what the number here. Okay, this is the COT ratio, buyer divided by the seller, buyer COT divided by the seller COT. I'm getting a ratio of 0.09. Whereas at the top, I will be getting a COT ratio, which is nothing but 530. That is nothing but the seller COT divided by the buyer COT here, which will be coming to 10.60. So what does it means is like the buyer effort is very small and the seller effect is 10 times more than the buyer effort. That's what it shows. The seller effort is 10 times more than the buyer COT. That's what it means. All right, and if number is less than 1, that means the buyer effort is very less compared to seller effort. That's what it means. So basically, we'll be looking for how much effort buyers are making, 10 times or 5 times or 2 times. to understand the importance of that particular candle. I'm sure now you have a fair idea about what is a COT level is all about, what is a COT ratio is all about, what is a delta candle is all about, how the delta candle is getting plotted, and how to control the tables. The last important one is the order flow blocks. So there are various blocks are there. Particularly, I'll go back and show you some of the blocks here. So in this candle, if you could see that, I'm seeing a bid and ask imbalance. I use bid and ask imbalance. You can also use bid and ask method. There is also, if you are not comfortable, you can use bid and ask histogram method, where the buyer and seller activity will be shown in the format of histogram. Or if you don't want to visualize in the form of bid and ask volume, you can also visualize in the form of delta. So the buyer minus seller at each and every price will be getting a delta chart. So you'll be getting only one value only. If the value is negative, you see that these are the places where I'm getting minus 91, minus 40. So what does that means is like those places buyer minus sellers are totally negative. Buyers at that level, the sellers are more. Whereas here you can see that the buyers are getting more at these price level. This is called DAP. DAP is nothing but delta at price. Likewise, we can also see volume at price. This is called VAP, VAP, volume at price. At each and every price level, it shows the volume activity. Okay, so what is VAP and DAP? Let's try to understand what is a VAP and DAP. A VAP means volume at each and every price level. It's called as volume at price. Volume at price. That's what VAP. DAP means delta at price. Delta at price. So where the delta will be shown at each and every price level. That's what a delta at price means. And there are order flow block. You can construct an volume delta block. One side it shows volume, another side it shows delta, which is, I think it's a recent addition in the Bell order flow. You can use volume and delta. On one side, left hand side, it shows volume, and on the right hand side, it shows delta. You can see that some of the numbers are getting negative over here. Volume will be always positive only, but delta can become negative or positive. So you can visualize the volume on one side, volume at price, and another side you can also visualize the delta at price also. Which one I prefer to use? If you ask me, I always prefer to use bid and ask imbalance. Now this is what an imbalance chart is all about. You can see that some of the places are shaded like green and red. Whenever the diagonal, we used to compare diagonally, the buyers and sellers. When I am comparing diagonally, whenever the buy side volume is 10 times more or 5 times more, which is more of a softer control. So if I right click and then if I go to the indicators, I'll be able to see an imbalance value. By default, the value will be 3, but you can change it to 10 or something. For something like Nifty and Bank Nifty, I prefer to use 10. Something like stocks, I used to prefer using 5. Otherwise, the default setting will be 3. You can adjust to your comfortness. It shows where the momentum activity is happening, where the momentum players are taking control of the market. You'll be able to see that. All right. So using that, I'll be able to see, can see that there is sometimes there'll be a block of activity of seller is happening over here around these locations, 23, 115, 90, 110. So whether there will be a significant seller activity is happening or not, where exactly the significant activity is happening, is that a momentum activity or not? So that gets into the next level of analysis from there. All right. So that is with bid and ask imbalance. As I said, I always use bid and ask imbalance. And when it comes to the tables, I will not use all the tables. I'll be using session letter, delta, cumulative delta, and volume. I will not even use the ask volume and bid volume. We have min delta and max delta. Min delta is nothing but the delta low, and max delta is nothing but the delta high. However, I prefer always using the delta, which is nothing but the delta closing value. All right, what else? So this, we had seen the different modes of order flow. We also seen the summary table. At the bottom, we'll be having summary table. I'll also show you which summary table I prefer to use. And then at the extreme left, we had intraday volume profile, which also shows the bid and ask activity in the format of histogram. Then we also have volume clusters. Sometimes we'll be having volume clusters, particularly around the open, where we'll be having a very dense volume. Something like Nifty, if it is more than the total sum of volume cluster is more than 450 lots, then we call it as a volume cluster. And volume clusters are sort of positioning by the smart traders sometimes. So it helps you to identify trading opportunities also around the open. If you are looking for opportunities or around even days, volume clusters are going to be very common. So those places will be finding a volume cluster based trading opportunities. And then when it comes to the type of data, when it comes to Ninja Trader or Ami Broker, we'll be using level 1 data. That is what data vendors provide, where you will get the limit order book depth only up to one level only. Whereas level 2 data, which is shown by the brokers generally they give it to their clients at free of cost. Brokers also will not be charged for that data. So they get up to 5 levels. So here the depth of the market is like, the depth of the market is what we call as a DOM levels. DOM levels. A DOM level means depth of the market. Depth of market. That's what it's called as depth of market. That's what it's called as a DOM level. Here we'll be getting up to one level only. Top bid, top ask is what we will get. Here I'll be getting up to 5 levels. Top 5 bid and ask level is what most of the brokers shows. And some brokers, they fall into the category of level 3, like brokers like Upstocks. I mean, not Upstocks, but Zerodha, 5 Paisa. So these kind of brokers, they provide up to 20 levels. And some of the premium data vendors like Interactive Brokers, Bloomberg, they also provide top 20 levels. Top 20 bid and ask levels. And tick by tick, of course, you will get up to all levels. All levels. So that is what the different types of data. Which one is enough to plot the order flow? If you ask me, level 1 data itself more enough to plot the order flow, market profile, doing some basic technical analysis, all those things. Even TradingView also has the level 1 data only. All the charting platform provides level 1 data. So when I'm looking into the order flow, typically, let's see what are the things that I'm looking from the order flow. Most likely, I'll be looking for where the momentum is happening, where the smart money is getting positioned. Is there any absorption is happening or not? Where the initiative drive is happening, where the momentum exhaustion is happening, where stop hunting is happening, where poor auction is happening, whether the low is secured or not, whether it's a strong secure low or a weaker secure low, where the stop hunting is happening, or where the order flow sweeping is happening, where bigger orders are happening, how unwinding is happening. Is there is a chance there is an unwinding is happening or not? Is there is a chance there is a breakout failure is going to happen or not? Or where people will be keeping their stop loss? Is the stop loss has happened or not? How successful a breakout is? Is it going to be a breakout failure? Where volume clusters are forming? Where big deltas are forming? Where order flow sweeping is forming? These are the things that will be running in my mind the day when I'm looking into the order flow charts. Right? But it's going to be a routine thing. Once you start using order flow, you'll be getting used to that. So these are the recommended settings for different symbols. Something like Nifty, I'll use 40. 40 as the price per tick or the brick size. Something like Bank Nifty, I'll be using 100 as the tick size. Means 100 will be multiplied by the tick size of 0.05 and it becomes 5 point brick. Nifty, it is 2 points. Bank Nifty, it is 5 point brick or the pins we call it. So we'll talk about delta. We also discussed about commitment of traders. And when I'm comparing the bid and ask imbalance, you said like I used to keep a setting of 10x. So we used to compare diagonally. Wherever the volume is more than 10x, it highlights on the buy side. If the sell side is more than 10 times, it will be highlighted with the red color. That's how it happens. All right, I guess more or less we came to the end of the session. Let me know if you have any questions. I'm happy to take your questions. So Vishal Agarwal is asking a very interesting question again. Why are we comparing bid and ask value diagonally? Why not we compare side by side on the same row? See, when I am having a top bid and top ask level, both are not same level. Let's say if 100 is my last traded price, LTP, I'll be having a bid level also. I'll be having an ask level also, right? I'll be having a bid level. Maybe the bid level will be at 99 and the ask level will be at 101. Immediate buyer will be available at 99 and immediate seller will be available at 101. That means the buyer and seller levels are never equal. So that is why we compare diagonally here. I guess that explains. Vishal Agarwal is also asking another question. So do I use a stock volume or future volume for a stock order flow analysis? Typically, you can use anything. If you are a cash market trader, you use stock volume. If you are a future market trader, you use future volume. So whichever is having high liquidity, you go and use that. Avoid using a penny stocks, low liquidity counters. It doesn't make much of a sense from a trading point. Particularly avoid using low liquidity counters because they are more prone to manipulation. Very frequently they are prone to manipulation. Reliance, HDFC kind of stocks or ICICI kind of stocks, liquidity will be very high. So it cannot be manipulated on a daily basis, right? So from that angle, so high liquidity counters, very rarely, that too once in a blue moon, it can be manipulated, but not on a day-to-day basis. But something like low liquidity counters can be manipulated very frequently. Not necessarily it has to be manipulated, but if at all if it has to be manipulated, it can be manipulated. I prefer to stay away from those low liquidity counters. Any other questions that I should address? Lakshmesh is having a question. His question is, when we see high lots at day low or high, how do we consider as a stop loss or reloading? That is a question. So whenever a reloading is happening, you'll be able to see that absorption, and that absorption bar high or low will be immediately getting broken. So that is how we'll be able to see that reloading. Continuously, the same price level will be traded multiple times, where you can know that it's an absorption, and the volume will be getting thicker and thicker and thicker. So that way we can understand that whether it's an absorption or not. COT is futures volume, right? No, COT is nothing but the commitment of trade, which is measured in delta terms. If you're seeing a number like 240, that means it is 240 delta value. It took 240 more buyers compared to the sellers to push the price from the low to the high. It talks in terms of lot size. It can be future, it can be equity, it doesn't matter. So COT talks about effort, how much effort or how much volume is required to push from the low to the high. In terms of delta, it talks in terms of delta, right? So there are two COTs are there. In US market, they publish something called COT report. That commitment is like it will be published every few days. I think they'll be publishing it thing like how in Indian market we publish FIDI data. They publish how many hedge fund managers are short, producers how much they are short, small traders how much they are short. That is different. Here we get the effort made by the buyers and sellers at each and every bar. So you should not confuse with the COT report from the US and the COT ratio or COT levels that we are getting from bar level. This commitment is completely different. So how does that absorption or exhaustion looks like in the order flow charts? Maybe we'll try to cover in the next chapter. In the part 2 of the series, we'll try to cover how does an absorption, what does an absorption means, what does an exhaustion means, how it looks like. We'll try to cover it in the chapter 2. Can we see a live order flow chart to understand the bid and ask transactions? Of course, you can. You can do that. Maybe you can consider taking a trial from Bell TPO and you can watch it during the live markets. That is one way you can analyze the bid and ask interaction, how the transaction is happening at bid and ask. In your session, in my session, if you ask me, absolutely yes, we do conduct live sessions. So we do conduct live trading rooms in it's part of our Trade Edge program. We conduct up to 45 days of live sessions. There we'll be having a live interactions. There will be morning 1 hour and afternoon 1 hour we'll be discussing about the live market activities. There we'll be discussing about market profile, order flow and volume spread analysis basically. Yes, there you can learn about during the live markets. I'll be guiding what is happening, where the smart money is entering, or where the trend reversal is happening, why a trend reversal should happen, and where how the momentum players are playing, how the commitment is happening, or how to play with the cluster activity, what we can anticipate on that day, how a day could get into a sideways mode. If it's a sideways mode, how the pattern will look like. If it's a trending day, how the pattern will look like, how the volume flow should be analyzed. So those are the things that we'll be discussing in our sessions. So Lakshmesh is also asking,